Following a number of problems that the crypto industry faced last year, primarily the strengthening of the crypto winter caused by the collapse of the FTX exchange, Canada has decided to tighten some of its crypto rules. According to two unnamed sources familiar with the plans, the country's umbrella market regulator, the Canadian Securities Administration, CSA, intends to tighten rules for crypto exchanges that operate in the country. Initially, the regulator mentioned having such plans midway through 2022, noting that certain compliance commitments will be necessary when it comes to unregistered crypto trading platforms. It is assumed that all trading platforms will seek to become registered entities in the country, but until they do, they will have to follow the new rules. Now, it appears that the regulator is finalizing these rules, and that it might soon announce them and enforce them. After the sources leaked the regulator's plans, the CSA was met with a number of requests for information and updates to the pre-registration undertaking (PRU) regime. So far, the regulator declined to discuss any of it, although it did say that the details will become available in the near future. The neighboring U.S. has already seen its securities regulator, the SEC, start its own crackdown on crypto companies. The SEC has put crypto advice-giving, offering firms under a microscope, and it proclaimed Paxos-issued BUSD stablecoin a security. Meanwhile, the regulator also announced that staking is now viewed as a security as well. Canada now might take the same route, followed by other G7 countries, such as the UK, in an attempt to police the crypto industry. However, given some of the last year's incidents, such as the collapse of FTX and the Terra blockchain before it, it is understandable why the regulators felt the pressure to do something. The main fear in the crypto industry now is that the efforts to ensure user safety in the crypto industry will destroy the industry by hindering innovation and limiting opportunities available to investors. The crypto world was always a mix of high risk and high reward, which was fine for those who knew the risks and how to handle them. However, for those fueled by the desire to earn but with no knowledge or experience on how to deal with risks, the crypto industry ended up being a money-draining mechanism. Another fear among Canadian industry players is the possibility of onerous demands to acquire individual approvals from regulators in different territories. At this point, some of the country's marketplace rules regarding alternative trading systems are not passport-able to other jurisdictions. The update to the rules was primarily driven by the Ontario Securities Commission, and one of the insiders commented that it would likely crush the Canadian crypto industry overnight. Dealing with crypto will become too expensive in the country, and businesses will have to leave or shut down.